Hi everyone. Welcome to today's episode of Yield Madness. It's episode one of Yield Madness, actually. I'm proud to have Pendle on for the first episode of this. Yield Madness is an interview series where we talk to the leading yield protocols across the various DeFi ecosystems here. Over the next few weeks, we'll be chatting to some of the more unique and innovative protocols in the space. Stay tuned for some hopefully very exciting and alpha-based conversations. So today we're proud to be joined by Pendle, as I mentioned, and more specifically Wilbert, who leads BD at or contributes to BD at Pendle. Wilbert, welcome and thanks for joining us.
GM, good to be here.
I guess to kick things off, can you give a quick introduction to yourself and what you do at Pendle?
Yeah, so I'm part of the BD ecosystem team at Pendle. And for those of you that don't know what Pendle is, we're a yield tokenization protocol and also the largest fixed rates market in DeFi today. So, just for context, today virtually any single yield bearing asset in DeFi can be brought to Pendle. And what we do is that we tokenize it and split it into PT and YT. So PT stands for principal tokens, which represents the fixed rate component of the yield bearing asset. And YT stands for yield tokens, which gives the holder all the future yield receivables coming from the underlying asset.
Okay, got it. So I guess before we dive further into Pendle and the mechanics or mechanisms behind the protocol, I'd love to just ask you another question. How did you get started with Pendle and I guess with DeFi in general? Or what was your rabbit hole moment in the space?
Yeah, I joined crypto or DeFi in 2020 DeFi summer. Back then, you had a lot of these yield farms with triple digit APYs. Some of them were even like a few thousand% APY. But yeah, none of those farms were really sustainable. If you were part of that time, you would know. Normally what yield farmers would do is to get in, and within a few days they would get out and basically withdraw their capital. So I think Pendle comes at a good time because we're trying to solve this whole issue of variable yields, which is what essentially yield tokenization is doing, right? Splitting up the yield bearing asset into PT and YT. So users that want a fixed rate that is predictable can simply hold the principal tokens instead of dealing with the variable nature of the underlying asset's yield.
Okay, can you give some examples of how this would work in practice? Let's take I guess a staked Ethereum token, STETH, or something similar. What would be the benefits of, I guess, holding the fixed value or fixed yield product as opposed to enjoying the variability and fluctuations of the yield?
Yeah, so I think the best example here will most probably be Athena's SUSDE. I think a lot of people are familiar with Athena. They
Hmm.
comprise more than 50% of Pendle's overall TVL. And essentially, Athena has a yield bearing stablecoin similar to Yala's YU. It's called SUSDE.
Hmm.
And with SUSDE, essentially on Pendle, we split it into PTSY SUSDE and YT So again, for DeFi investors that are looking to earn fixed rates, they would simply hold PT SUSDE, which currently gives about 12 to 13% implied rate or fixed rate until September. So the nature of Pendle is that all these pools have a certain maturity to it, and generally between 2 to 6 months, right? So um, the PT guys that are getting the fixed rate is really it's being provided by the YT buyers that are providing that discount. So on the other side, you've got this YT or yield token, which gives the holder all the future yield receivables, as well as any token incentives that are coming from the underlying asset. So, for example, Athena has this points program called SATs, just like how Yala has berries, right? So that goes to the YT holders. So with YT, it's a bit more of a higher risk play where essentially you're bullish on maybe the underlying assets project, and you want to get the airdrop, then you would basically want to get as much exposure to the underlying assets points. So the best way to do that would really be to buy YT. And also with YT, if the underlying assets yield goes up in the future, you're also receiving leverage exposure to that underlying assets yield.
Okay, interesting. From the Pendle backend, how do you manage this, or how complex a product is this? Like, as an example, how can you guarantee the fixed income part when the actual rate is variable?
Yeah, I think one thing to note is that a lot of people think that the principal token PT fixed rates comes from the underlying asset, but what's actually happening here is that the PT fixed rate discount is being provided by people who are buying YT. So I would say it's a fair market where essentially you've got the PT investors that are looking for fixed rates and YT guys that are looking to get higher exposure to underlying assets yield as well as points. And whenever people are buying YT, what they're really doing is exchanging their underlying principal asset for the right to receive future yield receivables. So whenever they're buying YT, they're actually providing a discount to the PT guys, which is where the fixed rate really comes from. So even if the underlying assets yield drops from, for example, 10% to 5%, the PT guys won't be affected at all because they are solely dependent on Pendle's AMM as well as the current implied rate that is trading on Pendle's AMM to earn that fixed yield. So towards maturity of the pool, PT assets will gradually get there will be appreciation in the value of the PT assets, and towards maturity, it will mature at 1 unit of the underlying asset. So, for example, before maturity, the asset could be like 90 cents on the dollar, and towards maturity, assuming it's a stable coin, it will mature at $1.
Okay, I see. Interesting. And you mentioned Athena's USDS as a key part of Pendle, or as a key driver of your TVL. Can you touch on, I guess, this connection with Athena and why this product comprises such a large part of your TVL?
Yeah, I think definitely Athena has paved the way for a lot of these yield bearing stable coins in terms of packaging basis trading strategy into a nice yield bearing stable coin that you can simply hold, right, without having to do anything. So I think in terms of Athena's growth, it's undeniable as well. They've gone from like a stable coin experiment into something that's over 10 billion in TVL today. And also just to share with everyone here, Pendle also just crossed 10 billion in overall TVL. So that's something that is, I would say, a pretty symbiotic relationship with what Athena's growth has been seeing. So we like to see ourselves as a part of the whole ecosystem. So when protocols like Athena, Yala, and whichever stablecoins that are on Pendle succeeds, Pendle also succeeds in that regard. So I think the other aspect of the amazing growth that we have seen is is due to largely attributed to PT assets being used as collateral. So what I mean by that is that, again, if you recall earlier, I was saying PT assets are giving a fixed rate. So today on most money markets, we're talking about Morpho, Aave, Silo, whichever money markets, they're mostly supporting PT assets from Pendle as a form of collateral. And a lot of DeFi investors prefer to use PT assets as collateral over the underlying assets because, firstly, they're giving a fixed rate. And secondly, again, I was saying it doesn't really depend on the underlying assets yield. For example, funding rates may not be very good, a couple months down the road. But today, Athena's PT fixed rate on Pendle is about 12 to 13% for about a 2 months duration until end of September, thereabouts. So you would be able to use that PT asset as collateral on Aave or Morpho to borrow other stable coins at a lower interest rate, like USDC and USDT at maybe 5 to 6%, and you're earning maybe 12, 13% on the collateral, and be able to do that a couple of times, essentially looping up on your yields to earn effective yield of above 20 to 30%.
Okay, interesting. Yeah, that's very appealing and very fitting for a yield madness conversation as well.
Yeah.
And as a side note, congratulations on the 10 billion mark. That's huge. So
Thank you. Yeah, I think the other thing that we wanted to talk about probably is, with regards to Aave accepting Pendle PTS as collateral. I think for the longest time, Aave obviously has been seen as the blue chip lending protocol, the largest lending protocol in DeFi. And
mhm.
I think it was one of the biggest unlocks in terms of looping strategies today is Aave being able to onboard Pendle PT, specifically PT SUSDE and USDE from Athena. But I'm pretty sure that paves the way for many other stablecoins in the future to come, whether it's Yala or any other CDP stablecoins or even RWA stablecoins, basis trading stablecoins. And by the way, it doesn't have to be a stablecoin. It could even be denominated in other assets like Hype or some other token. So I think we have seen pretty phenomenal growth so far on Aave. Combined, there's probably more than 4 to 5 billion worth of PT assets alone that is being deposited into Aave as collateral that people are actively borrowing against. So I think that shows the huge demand for yield strategies and looping strategies in DeFi.
Yeah, interesting. So when did you say you launched on Aave? Was this recently or?
Yeah, we launched on Aave, I think Q1 this year, if I recall correctly. It seems like
Okay.
it's been a while, but actually it's just this year.
Yeah,
Yeah.
time flies in this industry.
Yep.
I guess out of curiosity, who do you see as who like as a go-to user of Pendle products? It's not the easiest, I guess, protocol or yield source to try to explain to a DeFi newcomer. I'm sure interacting with Pendle is not it's not simple if it's your the first DeFi protocol you're interacting with. So what kind of users do you tend to see use the protocol, and who's your target audience?
Yeah, I think Pendle's users are generally in the 80 to 100 percentile of the top DeFi users. They're some of the most sophisticated DeFi users that we are seeing in this space. But that being said, I don't think it's something that's inaccessible to newer investors or newer DeFi users that want to get your feet wet. And I think the best way to learn again is probably just to get your feet wet, right? Whether it's holding PT assets or earn fixed yields or buying YT because you have a view of the underlying assets, underlying yield going up, or if you think that the points that is going to the YT is going to be worth it. So again, the best way to learn is probably to get involved. And one way to think about Pendle is that if you're already familiar with AMM or DEXs like Uniswap, right? Pendle essentially is just an AMM, but for yield trading, right? So that is one way to simplify the whole architecture. And for those of you that are still learning how Pendle works, I think Pendle's Docs has amazing educational content. Pendle Academy has amazing content and videos on how to get started and basically understand how the whole Pendle infrastructure works.
Okay, got it. We'll link to so I can agree to that or affirm that your docs are fantastic. We'll link to your docs and your academy in the notes after this call. Yes, speaking more about the Pendle ecosystems. So Pendle's been expanding it across different chains and ecosystems. It's active on, as an example, Ethereum, Base, and Solana. Can you talk us through this process of, I guess, cross-chain expansions and scaling the Pendle yield products across different ecosystems?
Yeah, that's a good question, and I think, by the way, we're not on Solana yet. It might happen at some
Okay, my
time, but
bad. Okay,
yeah, no worries. We're mainly on EVMs, so we're on Ethereum, Arbitrum Base, Optimism as well, BNB chain, and most recently we expanded into Hyperliquid L1 or Hyper EVM. I think it's notable that Hyper EVM was launched less than 2 months ago, and we've already amassed I think 600 to 700 million worth of TVL. So we're
wow.
second largest DeFi protocol, yeah, within 1 to 2 months. But a lot of that growth, again, I think it's very symbiotic with Kinetic, which is the largest DeFi protocol on Hyper VM by TVL. I think they just crossed 1.5 billion in TVL. And what Kinetic is a Hype LST staking protocol, right? So I was saying earlier, it doesn't really have to be a stablecoin protocol. Anything that has yield can be Pendle, right? So Hype LST, for example, from Kinetic, I think it's called K Hype. On Pendle alone has like 6 to 700 million TVL, which comprises maybe 90% of the TVL on Hyper AVM. So that's the way we see ourselves growing in the future, where we try to make sure that every single protocol in Pendle succeeds, because when they succeed, that effect trickles down to Pendle. And I think in terms of how we're thinking about expansion in the near future, we're definitely keeping our eyes out for upcoming ecosystems, right? There are a couple of chains that are going to be very interesting. We already announced our deployment plans and involvement with Plasma. I think it's going to happen sometime next month. So yeah, I think Plasma will be very interesting to watch in terms of the stablecoin yield bearing space.
Hmm.
Other ecosystems that we're still looking at, obviously Mega ETH, you've got Monad, a lot of other new chains, and even a lot of these institutions, right? Circle, for example, launching their own new chain. It's called Arc. I think it's going to happen soon as
Yeah.
well. Yeah, Stripe also launched their own chain. So it's something that we see. There's going to be probably well, the irony here is that there's probably going to be more chains than protocols in the future.
Yeah,
Um,
it seems like we're
yeah, so
gravitating towards that.
exactly. So I think cross chain is something that we can't ignore. And honestly, I think we would like to see more differentiated chains, even though, currently there's very little differentiation between chains. But yeah, seeing the special purpose chains, like when, for example, Plasma specializing in stablecoin purposes, and obviously the Circle's new chain Arc will most likely be focusing on RWA as well. That will be interesting narratives for us to watch. But I think the real end game here for Pendle is to eventually not just stay within the whole DeFi ecosystem, which honestly is a very small pie when you compare it to the whole financial market, right? So yeah, for example, the interest rates market in TradFi alone is like more than $1 trillion, right? So it's
Hmm.
the pie compared to DeFi's TVL today is way larger. And we see the opportunity of expanding potentially Pendle PT assets as a fixed rate asset that gives a lot of investors, traditional financial investors, access to DeFi yields as being a pretty big opportunity because a lot of this, TradFi investors, they want to get access to DeFi yields, and what better way to do it than to basically package a Pendle PT product, right? So that's one of the things that we're looking at in the probably Q4 of this year.
Okay, very interesting. Would that, yeah, is that a teaser for an upcoming Pendle chain launch, or just a vision to
Yeah,
stay as a protocol?
yeah, I think it's something that people have asked us about, but I think it's quite unlikely we'll see a Pendle chain anytime soon. Um, just because I think we do what we do best, right? And that's not building a chain. We understand how to build yield markets and basically tokenize yields, but we're not experts at building a new chain. But in terms of new product launches, I think it's probably part of this conversation that we're having. But we recently launched Boros, so if you want to dive deeper into that, happy to share more.
Yeah, go for it. That'd be great.
Yeah, so we launched Boros last month. And what Boros is essentially is a perp dex that allows people to trade funding rates. So what that means is that, if you think about it again, like protocols like Athena resolve a lot of this yield-bearing stablecoins that are doing delta neutral basis trading strategies depend heavily on funding rates. But today, there's no solution for a lot of these protocols to hedge or lock in high funding rates in a better market environment. So Boros was essentially built for a lot of these hedge funds or whoever's really that's running basis trading strategies. So they will be able to lock in high funding rates. For example, previously we're looking at ETH funding rates and BTC funding rates was before this week was actually much better. But currently on Boros, it's still trading at about 8% implied rate. So what that means is that on Boros, you can go long and short on funding rates itself. We currently have two markets, BTC and ETH markets from Binance, and they settle in line with Binance settlement, which is every 8 hours. And it's in line with the maturity of Binance's quarterly futures market as well. So this is something that users can use to hedge funding rates by, for example, shorting the funding rate on Boros itself. So if you're shorting it, for example, 8%, and funding rates for BTC or ETH drops to 5 to 6%, you would still be receiving funding rate settlements based on the 8% that you shorted the rate at. So that's one way to hedge the rates for a lot of these large funds or even stablecoin protocols like Athena that is running basis strategies.
Ah, okay, very interesting. When did you
Yeah.
launch Boros?
Just about 2 3 weeks ago.
Okay, interesting.
Yeah.
And how's the reception been so far?
Yeah, I think that the traction so far has been pretty amazing. We started out pretty conservatively capping the OI or the open interest just because we wanted to make sure that all the risk mechanics were working properly before expanding it out. but we have been aggressively increasing the open interest caps. And we just made an announcement to increase the caps again. So yeah, if you're looking to get involved or get your feet wet, I think it's definitely worth trying out Boros.
Okay, interesting. We'll share a link to that in the chat as well, so we can point our listeners towards that. But we'll definitely go check that out after.
Sounds good. Yeah, we just did 140 million in the first week since launch on Boros alone. So that's something that I think the team is quite happy to receive, just because, again, Boros is not the simplest product to understand because you would first have to understand perps and understand funding rates. But yeah, within the first week, we actually saw about 140 million in trading volume.
Oh wow. Okay. And yeah, again, it goes back to I guess Pendle not being the most beginner friendly, or I guess it is depending on how you
Yeah.
position it. But it's a complex suite of products. But it's very interesting to see the adoption.
It is, yeah, but
Yes.
it is also something that we try to solve on an ongoing basis, and not just for Pendle, but I think in general, DeFi UI and UX or UX in general is not the best. There's some learning curve to it, but once you get the grasp of, like the most of the other DeFi protocols in the space, I think Pendle wouldn't be that hard to understand.
No. And I think it's also, as you mentioned, it's a case of getting your feet wet, jumping in there and trying it out, and then I guess slowly realizing it's maybe not as difficult or complex as it sounds.
Exactly.
I guess we're nearing the end of the call, and I don't want to keep you on for too long. So you've mentioned some of the long-term plans for Pendle, or what we could look forward to in the I guess mid to long-term future. But yeah, what are you most excited about in the near future, in the coming months?
Wow, I think probably the new launches or the new chains that are coming up, especially the ones that are launched by Circle, Stripe, right? A lot of this institutional or Web2 players getting involved in this space and launching large chains. And obviously, a lot of these guys already have branding, not Circle, but I mean like Stripe and the other, like the other companies that are launching their own chains. But yeah, that's probably one of the things that I'm most interested in, and also obviously the continuous growth of Boros to see how the retail market picks it up as well, because I think right now again it's mainly just a bunch of sophisticated DeFi users that are using it, even though it's not that hard of a product. I think the parallel here would be essentially hyper liquid, but for yield trading or for funding rates trading. And in the future, it wouldn't even be just funding rates, right? You could trade anything on Boros, right? Anything that has an interest rate, and we're able to pull the Oracle rate to Boros can be traded. Could even be real world rates like mortgage rates, FX rates, right? A lot of these different things can be traded on Boros itself. And yeah, so that's something that I'm super excited about.
Okay, exciting. It's good to hear. It sounds very exciting, and we'll keep an eye on Pendle and everything that you do. I think on that note, is there anything else you want to share or let the listeners know about?
No, I think we covered most of it. I really appreciate being on this first episode of Yield Madness.
Yeah, it's an honor to have you and Pendle on as the first guest here, and we'll stay in touch with the future collaborations with Yala, you, and Pendle.
Sounds good.
Yeah, thank you so much for coming, and thanks everyone for tuning in. Speak soon.
Thank you. Bye.
Bye bye.